Okay, so before we begin, I want to imagine something very clearly. Imagine you are a detective like Sherlock Holmes. You walk into a situation where something is wrong, but there are no obvious answers. So nobody explains what happened, and there is no clear evidence in front of you. So what do you do in this case? So that is what I mean by you started observing, you look for patterns, you notice small details that others ignore. You connect uh, those details together until a story starts to form. So now let me shift that idea. And instead of investigating a crime scene, imagine you are investigating financial data. So, which mean numbers, transactions, invoices, bank accounts. That is exactly what forensic accountants do. So they don't just work with numbers, they investigate them. And today, I am going to show you how accounting becomes a tool for investigation, how fraud actually happens, and most importantly, how professionals detect and prove it step by step. Okay, so let's start with a scenario to make it more clear. So let's say we have a company discovers that $500,000 is missing and not delayed. So there is no delay on receive this money from customers, for example, not recorded incorrectly, actually missing. It's not exists. It was in the company, but it is disappeared. So now here is the strange part. There is no hacking. The IT system shows no breach. There is no break-in. No one forced access to the company. Everything in the system appears normal. So now think about this carefully. If everything looks normal, how do you even begin to investigate? So you cannot begin investigate because there's nothing, right? Everything look normal. So where would you look? This is where forensic accountants think differently. They don't assume the system is correct. They assume that if money moved, there must be a trace, even if someone tried to hide it. So their job is to find that hidden trace, even if it is prudent inside thousands of transactions. So forensic accounting is not just accounting. It is a combination of accounting, auditing, and investigations, three together. So a normal accountant focuses on recording transaction correctly and preparing reports on the accounting system. And auditors checks whether those reports recorded by the accountant follows the rules and standards of accounting. But forensic accountant goes further. They question the transactions. They ask, why did this payment happen? Who approved it? Does it make sense based on business activities? Because fraud is not obvious. Fraud is designed to look normal like any normal accounting transaction. So that's why forensic accounting requires not only technical knowledge, but also critical thinking and skepticism. So fraud is a major issue globally. Organizations lose millions and even billions of dollars, sometimes more than billions of dollars every year due to fraud. And the most important thing in this, fraud is often not detected immediately. It can continue for months or even years. So why? Because fraudsters are careful. They don't create obvious mistakes. They create transactions that look normal, like any normal transaction inside the company. Without forensic accounting, these activities can continue, causing increasing losses and damaging trusts. So forensic accountants play a critical role in protecting business and ensuring financial integrity. So let's go through real fraud case. So let's walk through a real type of fraud step by step. Let's say an employee works in financial department, specifically in accounts payable. So accounts payable, it is the account that responsible to pay any payment for the company. So this means they are responsible for processing invoices and making payments. So now here is what they do. First, they create a fake supplier in their system. This supplier looks real. It has a name, an address, and bank details, but in reality, it does not exist. Second, they create fake invoices. These invoices are designed to look exactly like real ones. So same format, same structure, same type of services. And third, they approve these invoices. So sometimes they have approval authority, or they find ways to bypass controls if they don't have the approval authority for the invoices. Finally, the company pays the invoice, and the money goes to a bank account controlled by the employee, the bank account for this fake business, which is controlled by the employee. Now here is the key part. They don't steal a large amount at once. They steal small amounts repeatedly, 2,000, 3,000, 5,000, to make the transaction like normal transaction. So each transaction looks normal on its own. But over time, these small amounts add up to large frauds. So this is how fraud hides, not in big, obvious actions, but in many small ones. So now, how does a forensic accountant approach this situation? So they have situation of the fraud right now, and they need to do the investigation, how they can do that. So they do not assume that all suppliers are legitimate. They verify everything. They check, does this supplier actually exist? It is registered as a real business. Does the address match a real location or just it's a fake location? Who owns the bank account? Who owns the bank account where the company did the payments? They may even contact the supplier directly. They compare reports from different systems. They look for inconvenience. And this is where accounting becomes investigation. Accounting, in this case, will become investigation to investigate every single thing inside the accounting system to catch the frauds. So forensic accountants look for what we call red flags. So these are warning signs that sometimes might be wrong. For example, duplicate payments. The same invoice paid twice. That is what I mean by duplicate payments. This is unusual and may indicate manipulation. Okay. So round numbers, for example, round numbers, transaction like exactly 5,000 or 10,000, we will have a doubt in it. So that is the forensic accountant when have a firm number like this one, 5,000, 10,000, without any decimals or not like whole number like this one, they will doubt on this transaction and they will check it. So real transactions often include irregular amount, not perfect round numbers. So missing documentation, no invoice, no contract, no approval. This suggests that transaction may not be legitimate. So lifestyle mismatch. When an employee's lifestyle does not match their income, if they have income, for example, $40,000 per year, and they have Mercedes, they have a very expensive house, they have, let's say, an expensive accessories like watch, and all of that, it is not matching the lifestyle of the employee. So now we can ask if this employee doing something wrong or not. So for example, someone earning $45,000 living a very expensive lifestyle. So each of these alone is not proof of fraud. It is not a proof of fraud, but we can start detecting the fraud from these points. So together, they raise suspicion and trigger investigation. So let's think about this logically. If someone earns $45,000 per year, but drives a luxury car and travels frequently, what would you think? Maybe they have another source of income. Yes, maybe they have another source of income. Maybe not. A forensic accountant does not assume guilt. They investigate. So there is no assumptions. We have to go through investigation. They look for evidence. Do they have other income? Are there unusual transactions? Is there a connection to company fraud or could the company fund to do the fraud? This is a structured and objective process. So now, this is the most important part. Let's go step by step into how forensic accountants actually solve a case. So the first step, the data extraction. So they collect data from multiple sources, accounting systems, bank systems, payment records, vendors lists. They don't rely on one system. They compare multiple sources to ensure accuracy of the transactions. Step 2, data analysis. They use tools like Excel or specialized software. They don't just look at totals. So we go through details, not totals. They analyze patterns over time. For example, which vendors are paid most frequently? Are there repeated transactions from those vendors? Are payments happening at unusual time, like weekend, while the company is not working, for example? Step 3, detect anomalies. So they identify transactions that don't follow normal patterns. For example, payment just below approval limits. If the payment just below approval limit, let's say we have the authority for this person to approve a payment of maximum $10,000. And we find the payment done, it is $9,990. It is just below the maximum authorized limit for this person. So we have a doubt in this case. Transactions on weekends. If the company not working on weekends, why the transaction has been completed in the weekend? Then there is something wrong. Repeated payment to the same accounts. Maybe it is something wrong in this case as well, and we have to investigate it. These are not proof, but they are strong indicators that there is something wrong and we might have a fraud in this case. Step 4, evidence collection. So they gather supporting documents, invoices, emails, approvals, bank transfers. Every piece of evidence must be documented and traceable. Why? Because it might be used in the courts. So if we got the case, we can use all of this evidence at the courts. Step 5, build the case. Step 5, we can build the case. If we got all the necessary evidence, we can build the case. They connect everything, transactions, employee, bank account, and benefits. They must prove who did it, how they did it, and how much was stolen. That is how the fraud works, and that is how the accountant can catch it. Step 6, reporting. After the forensic accountant finish their investigation, collect evidence, and finish everything, they will create the reports. They prepare a forensic report. This report explains findings clearly and logically. It must be strong enough to support legal action at the courts. So forensic accountants often work with lawyers and law enforcement. They may support legal cases by providing financial evidence. Sometimes they testify in court as expert witness. Their role is to explain complex financial information in a way that others can understand. So if fraud is proven, consequences are serious. So criminal consequences include fines and imprisonment, jail time. So the employee who did this fraud and he got catched by the forensic accountant, maybe they will pay a huge fine, and also there is a jail time. So civil consequences include repayment of stolen money. Professional consequences include job loss and permanent damage to reputation. This shows that forensic accounting has real-world impacts. So this field offers strong career opportunities. So the entry-level salaries range for forensic accountants in Canada. It is at the entry level, it is between $55,000 to $70,000 per year. With experience, professional can earn over $100,000. So it is good income for this type of career. So seniors rules can earn even more than $100,000 per year. So this is because the skill set is specialized and in high demands. It's high demand in Canada and everywhere in the world. So to succeed in this field, you need more than technical knowledge. You need analytical thinking, the ability to connect patterns, attention to details. It is very important. So small details can reveal frauds. Skepticism, always questioning information and don't assume anything. Ethics, handling sensitive situation responsibly. So the journey starts with accounting education. First of all, you have to have accounting degree. Programs provide fundamentals or the foundation knowledge and practical skills. So from there, you gain experience and can specialize in areas like forensic accounting. So the conclusion, accounting is not just about numbers. It's not just a transaction and numbers and that's it. It is about understanding patterns, asking questions, and uncovering truth. It is about solving problems and making a real impact. And if that interests you, forensic accounting may be the right path for you. Thank you for listening.